Prices are way down. Groceries are down. Everything's down. Energy's way down. Even interest rates with a bad chairman of the Fed. He's terrible. He's a fool. But even interest rates are down. So our country has never done better.
So I think he's got a point. We're going to talk about it with former Federal Reserve Governor Kevin Warsh. Kevin, welcome back. I think it's interesting. There's a lot of soybeans, wheat, grain, corn, gasoline, wholesale energy. I know we're supposed to be in the era of tariff inflation, but it doesn't seem to be tariff inflation. There's more deflation. But here's my generic point. The economy is booming. And the question I have for you is, in a 4% economy, according to the Atlanta Fed, what kind of a monetary policy do we need to accommodate it properly?
So in 2 words, new management is I think what we need, Larry. Right. But you set me up for that, I think. So I think the reason commodities are down is, your point is right, the U.S. economy is booming. The global economy is not booming. The U.S. is taking huge market share, huge economic growth from the rest of the world, because the president's policies are hitting our economy first, and their policies look like the policies of the last 4 years. So commodities are down because these are global assets. The U.S. economy is doing great. President's policies are working. His policies are leading to stronger growth and lower prices. I wish I could say the same about the Federal Reserve. Their policies have led to something like stagflation. Their policies did a lot of harm, and the president has to dig out from those. The Fed's policies are working at cross purposes with the president's policies. Thankfully, the president's policies are so strong they're doing it. So what about the Fed? What the Fed really needs to do is change their operating framework. They need to change their models. They need to change a lot of personnel. And in some ways, their policies need to be as focused on Main Street as President Trump's policies. If I look right now at what they're doing, their policies are quite good for Wall Street. They need to take their balance sheet down and redeploy that money to Main Street so that Main Street can have the strong economy that we're seeing in financial markets. Now,
when you say the balance sheet, for folks looking at home, I want to call it loosely the money supply, if that's fair. It's like the footings of any bank, for heaven's sakes. It's like the family's balance sheet. Right. So really less money would mean lower interest rates, and that's consistent with low inflation. But we shouldn't be reluctant, right? I mean, why? Steve Myron, temporary Fed guy, why not? Why couldn't we take the target rate from 4 to 2?
So we can lower. We
can
lower interest rates a lot, and in so doing, get 30-year fixed-rate mortgages so they're affordable. So we can get the housing market to get going again. And the way to do that is, as you say, to free up the balance sheet, take money out of Wall Street. Wall Street right now is booming. They don't need any extra help. They don't need excess money. But that excess money can go to Main Street, and that will give us room for lower interest rates. Lower interest rates, with the kind of technology revolution the president's policies have permitted, the massive investment that's happening in the economy domestically and from foreigners, this is the seed corn for a productivity revolution. What worries me, and I suspect what worries the president, is the Fed's going to make its 6th or 7th big mistake in the last 6 or 7 years. They've got to allow that productivity and that technology to continue to lower prices instead of saying, oh my gosh, the economy's too strong, we better stop this.
It's a supply side, Laffer type boom. I mean, low taxes, deregulation, energy dominance. I don't know. It's like the only thing we have to fear is fear itself. The Fed just go ahead, take a rip at the ball. Go ahead. Make the adjustments.
We've seen a sea change in the White House on policies, a sea change at the Treasury going to Secretary Bessent. We need the same kind of sea change at the Federal Reserve. I was in Washington last week for these IMF meetings. Central bankers, finance ministers come from around the world there. They heard a golden age message from Treasury Secretary Bessent, from Ambassador Greer. What did they hear from the central bank? Malaise. It is very dangerous when 2 parts of our government are working at cross purposes, and it's got to change.
Right. They should give him the policies he wants. Anyway, it's working. They should not be a step in the way. I agree with you 100%, Kevin Warsh. Listen to this guy. He knows whereof he speaks.